All right, let's cut right to it. BioNTech just dropped its Q3 earnings, and if you're an investor, you need to ignore almost everything except for three key things. They just jacked up their revenue guidance by almost €1 billion. They're slashing R&D spending by 600 million, and this whole thing is being fueled by a massive all-in pivot to oncology. So yeah, forget the COVID story. That's the past. We're going to break down the hard numbers that show exactly where this company is headed next.
Okay, so let's just lay it all out. These 3 points right here, this isn't just an earnings update. This is a complete rewrite of the entire investment thesis for BioNTech. You've got a huge upgrade to revenue, a serious cut in spending, and real concrete progress on their next big drug. This isn't just a beat. This is management basically shouting from the rooftops that the company is undergoing a fundamental strategic overhaul. And you know what? They're telling us exactly where they're placing their bets. So first, let's get straight to the numbers, because this is where you can see the pivot in black and white. It's undeniable. BioNTech didn't just tweak its financial roadmap for 2025, they tore it up and wrote a brand new one. Now, what's so fascinating here is the story these two columns tell. I mean, just look at the two sides of the ledger. You've got revenue guidance absolutely exploding upwards, while at the exact same time, R&D is getting sharply reined in. This is a classic textbook signal of a company that's maturing. It's moving away from that high burn, let's try everything research phase and into a disciplined, commercially focused growth engine. And the scale of this top-line revision is just staggering. We're talking about an increase of nearly €1 billion to their 2025 forecast, right at the midpoint. This is not some minor adjustment. This is a fundamental, seismic shift in the company's near-term earnings power. And here's the other side of that coin, and it is just as important. This signals a whole new era of capital discipline. They're slashing the R&D budget by a massive €600 million. Now, the corporate speak for this is active portfolio management. But for us as investors, let's call it what it is: a ruthless focus on the projects most likely to pay off, and an end to the more speculative science experiments. So you gotta ask yourself, right? Where is all this new money coming from? And let me be perfectly clear. This has absolutely nothing to do with some surprise comeback for their COVID vaccine. Nope. The engine behind this entire pivot, well, it has a name. And here it is. The whole financial picture is being redrawn, thanks to a huge new oncology partnership with the pharma giant Bristol Myers Squibb. You see, this deal isn't just a nice vote of confidence in BioNTech science. It's a fire hose of non-dilutive capital pointed directly at their balance sheet. Let's just follow the money for a second. BioNTech already has $1.5 billion in cash in the bank from BMS. But even more important is this. It's part of a guaranteed non-contingent stream of payments that totals $3.5 billion through 2028. For an investor, what that means is a predictable, multi-year revenue bridge that basically bankrolls this entire transition away from COVID. And you don't even have to take my word for it. The company's own CFO, Ramon Zapata, couldn't have spelled it out any clearer. He's saying this BMS partnership gives them immediate financial firepower. It validates their long-term pipeline, and it massively de-risks the whole pivot. Okay, so we've established they have this financial firepower, the balance sheet is secure, so the next logical question is, where are they aiming all of it? Well, all that capital is being deployed to build what they hope is the company's next blockbuster pillar, a drug called Pumatanagreg. So what exactly is pumiastatamig? Well, the simplest way to think about it is as a 2-for-1 weapon against cancer. It's this single, elegant molecule that's engineered to do two jobs at once. First, it hits the PDL1 checkpoint, which is like taking the brakes off the body's immune system so it can go attack cancer cells. And second, it hits VEGFA, which basically chokes off the tumor's blood supply. It's a 1-2 punch, and this dual-action approach is exactly why a company like Bristol Myers is willing to bet billions on it. And they have a really clear 3-wave strategy to turn this thing into a massive franchise. Wave 1 is all about establishing a beachhead, getting approvals in the 3 biggest cancer markets: lung, breast, and colorectal. Wave 2 is about expanding and expanding fast into more than 10 other cancer types. And then there's Wave 3, what they call the elevate phase. This is about building a long-term competitive moat by combining Pumatanagreg with their other new drugs. It's a textbook strategy for market domination. All right, so as investors, we're always looking ahead, right? The past is interesting, but the future is where the money is. So let's focus on the key upcoming events that are either going to validate this whole strategy or potentially raise some pretty serious red flags. You might want to get your calendar out because these are the dates that matter. Coming up in December, we get the breast cancer data. That's the next big test. Then, early 2026, there's a key update in colorectal cancer. And all through 2026, we're going to see crucial data from another one of their drugs, TPEM. Every single one of these is a potential value inflection point for the stock.
But look, it's not all sunshine and rainbows. We have to be clear-eyed about the risks. And there's one clear headwind in this report. The company confirmed a delay for that other drug I just mentioned, TPEM. The regulatory filing is now officially pushed into 2026 because of ongoing talks with the FDA. Listen, any delay is a negative, and this is definitely a risk factor we need to watch very, very closely.
So let's just boil this all down. This is the entire strategy in a nutshell. Over on the left, you've got the COVID business. It's declining, sure, but it's still a cash machine. And on the right, you've got this emerging oncology powerhouse, bankrolled by the BMS deal and built around the massive potential of Pumatanagreg. It's simple, really. They're using the profits from the past to build the growth engine of the future. And that brings us to the single most important question you have to ask yourself if you're looking at this stock. The company has all the ingredients for success, right? They've got a massive $16.7 billion war chest, a deep-pocketed partner in Bristol Myers, and a clear, well-defined plan. The bull case is right there. But the bear case? It all comes down to execution risk. So for investors, the question isn't whether the plan is good. The plan is good. The question is, can management deliver on it fast enough before the market loses patience? And that right there is the multi-billion-dollar bet you're making on BioNTech today.